So welcome on in. My name is Justin Brennan. If you don't know who I am, not a problem. You wouldn't be surprised. I'm not really an influencer person. So I'm a multifamily guy. We buy and sell apartments around the country, and we do it with investors. And I've been doing it for, gosh, almost 15 years. Started really in 2010. Was kind of our first rental property. I'm going to get into that here briefly. And I've kind of grown our portfolio. But now I'm realizing the value in having influence in the marketplace and sharing your story and what you can do. It not only helps people, which is what we're here to do, but by in turn helping others, you create help for yourself. It becomes a win-win. And we'll share kind of our vision of what we're doing and what we've been doing for the last 2 years and why it's been growing and why we're even here tonight, right? There is a purpose. So I love that. So how do you buy an apartment building in the next 90 days? Here we are. Call it the 10th, 12th of November or December, December, and you're going into the holidays, and then here we are. So everything you're doing right now is going to be paying its dividends in 2025. Question for everybody here. Who here does what's called a vision letter? So what it is, just FYI, is you write yourself a single page letter in 3-paragraph forms. Personal paragraph, professional paragraph, and health and wellness spirituality paragraph of what your future looks like. For example, it is now December 31st, 2025. I have done XYZ personally. I've gotten into a new relationship. I've done this with my children. I've done this and this and this. I've done this and this personally. Next paragraph. I have succeeded in achieving X amount of income. Be very specific. And we did XYZ professionally. We took down 3 apartment complexes. We expanded our portfolio and we got 100 units. Blah, 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 blah. Everything you want professionally. And then last will be health, wellness, spirituality. And talk into the terms in the future tense. And I have done XYZ, okay? It's an amazing thing. And then you're going to read it. You're going to literally print it out. You're going to read it every single day. Every single day. So you put it in a place where you're going to look at it. I don't care if it's on your bathroom mirror. Watch what happens. You start reading that sucker. I'm looking at mine that I wrote last year. I got all the red check marks going off on it. It's incredible when you actually do this. Trust me. It's an incredible thing. So, beautiful. Okay. So how do you buy apartment buildings in the next 90 days? Has anybody heard or read or seen these quotes before? The more hands you shake, the more money you make. Your income is equal to the problems that you solve, right? If you solve $1,000 problems, you make thousands of dollars. If you solve $100,000 problems, you make $100,000. If you solve $1 million problems, you make millions of dollars. It's quite simple, okay? So if you want to be a millionaire, go solve $1 million problems for society. You'll become a millionaire. Does anybody remember this year? 2008. Who here remembers the financial crisis, 2008 through maybe 2010-ish, 11? In moments of suffering, greatness is born. So, a little backstory on myself, and I won't even touch on like 2002 to 2007, right? Title insurance, I started. I didn't want to go work with family because I kind of wanted to do it on my own and kind of become a man and know that I could actually be successful regardless of family, okay? So I did all that, went to grad school, blah, blah, blah. 2007, 2008, started to work with family, my dad. Bada bing, walked right into the 2008 financial crisis. I mean, it was devastating, as everybody remembers the collapse of 2008. And then during that chance, I'll kind of show what happened. I became an asset manager for a lot of the major banks, handling their REO foreclosures all around the country for a lot of the major banks. Because they always say you're either on the positive side or you're on the negative side of real estate. We were on the positive. I had to go negative because that's what it was. That was the game. So there were stories written about it. It was not fun. My dad, an incredible man, taught me everything. Really my grandmother too. We weren't born into wealth. My dad is completely self-made. He was kind of that transitional character in our family that made it big, right? I mean, total middle class, grew up in a 3-bedroom, 2-bath home in Bonita, California. My dad started as a broker in real estate, then got into kind of building single-family homes, subdivisions, then got into big stuff. He was building 200-unit apartment complexes. But he'd always build and sell them, build and sell them, build and sell them, which was great. But then his income in our family would mimic the real estate cycles. And I was like, man, Dad, this is incredible. You're making millions of dollars, but you also are very susceptible to market cycles. And so it bred into my brain, cash flow is king. And my dad wasn't in the game of of buying and holding and using cash flow. He was in the game of building and selling and making big pops, which was great. But then you also can run into this. And when you hit a violent downturn, boom. He went through 4 market cycles, and this was the 4th one. 2008 took him down. He had a massive bankruptcy, and it was devastating. Like, it was devastating. I mean, our family lost everything. He lost everything. I mean, thankfully, I made it through without any kind of BKs and stuff, but I lost a lot of money too. Because I was in my mid-20s at that point. Mid to late 20s at that point. So, pretty devastating. So at that time, so we're sitting there, and I, like 2008, 2010, like, you're trying to figure things out. I knew we had to buy property. I didn't have any money, right? I was getting my butt handed to me. But I did have a friend who I talked to in grad school who was not affected directly by this, who I said, hey, because remember, you either have the check equity or you have the sweat equity. Remember this. This is critical if you want to do any kind of real estate investing. You either bring the check equity, money, or you bring the sweat equity, knowledge and skill set. Right? You decide which one you're going to bring to the table. If you're lucky enough to bring both, by all means, you're a unicorn. But usually when people bring one or the other to the table. So I was bringing the brains because I had the ability to find deals, analyze them, raise capital, structure deals, close, escrow, manage. My business partner, currently Christopher, right? At that time, he had some capital, had no real estate experience. But I could bring to the table the sweat equity. He brought the check equity. We went and bought our first unit in 2010 for $100,000. Little condo, right? I just knew we had to buy property. I didn't know how we were going to do it. We just had to buy property. And that was literally our first deal. Then fast forward, okay, we started doing little duplexes, triplexes, quads, all that stuff, which are great. And we had accumulated about 20 units and about $3.5 million of assets by 2018. And we thought we had made it. We thought we had made it. Because we're like, dude, like, we did this. It's all our own money. We control it all. This is great, right? But then you realize, crap, like, we're running out of our own money and we still want to grow and scale. So how does this thing work? So I started looking up online, like researching like syndication. You hear that term, OPM, other people's money. Like, how do you do this stuff? How do you raise money? How do you raise money from people? I was scared to death to do it. I didn't understand it. Didn't have friends, didn't really have anybody that I thought I could go approach with it. I'd never done it before. Probably all the same things that you're thinking to yourself as to how you can and can't do it, right? So that's where we're at. So now I had to learn the game of syndication. I had to learn the game of OPM. How can I use our money that we have in combination with other people who want to invest alongside us to go buy bigger deals? Okay. And that's where we went to here. So I want you to understand that in 8, 9, 10 years, we went from 0 to 20 units. From 2018 to 2021, and now in 2024, we've gotten over 685 units and $180 million of assets, of which we own about 40% of. Okay? We owned 100% of 300 or 3.5 million. Now we own 40% of 180 million. You can do the math. And that's how you scale. Okay? That's how you leverage your money in conjunction with other people's money to go buy real estate. You're here tonight because you want to invest in real estate. You have interest in it. Has anybody ever met a single person that if you went to them and said, hey, would you like to invest in real estate? They're like, no, real estate investing sucks. Like, is there anybody that's ever had that happen to them? I'd be shocked if anybody's ever had that happen to them. If they ask somebody, hey, would you like to invest in real estate? And the person's like, no, real estate investing sucks. It's the worst thing ever. Has anybody ever had that happen to them? I'd be shocked, because then the person you're talking to doesn't understand, right? Or they got screwed somehow, because I have yet to have that happen. Everybody wants to invest in real estate. That's not your problem. They just need a deal that makes financial sense, okay? And they need a trustworthy source to invest alongside with. A deal that makes sense and a trustworthy person to invest alongside with. And then doing the investing is the easy part. Everybody wants to do it. Would you agree with that? Would you agree with that? So just to kind of give you a little bit of background, right? Of myself, what we're doing, story. And if this relates to anybody in here, that's what it's all about, right? I mean, this is something where this wasn't like, hey, trust fund, here you are. Like, we built this thing from the ground up and went 0 to hero. And where we're headed is 10,000 units, right? We're going to 10,000 units and over $1 billion in real estate. So where would you like to go? Does anybody know what a BHAG is? Does anybody know what a BHAG is? Don't worry about the tenants on the property. You're digging into the weeds. You're already creating limiting beliefs. They think they have to take care of the tenants on the property. No, you do not. No, you do not. Okay, BHAG, big, hairy, audacious goal. So my BHAG, my big, hairy, audacious goal is 10,000 units and $1 billion in real estate. So just so you understand, because this leads into what we're going to talk about, which is why we're here tonight, why we're doing what we're doing, why I'm educating you, helping you out. Because you do it through partnerships, you do it through collaboration, you do it through community. You do not do it alone. If you want to grow in multifamily, multifamily is not a game of solopreneur. It's a game of do it together, right? Collaborations and partnerships, that's how you grow and scale. That's how you raise capital. That's how you finance things. That's how you find deals and source things, right? That's how you manage. That's how you close. That's how you do all the different steps, okay? That's how it's done. It's done through community, which is why we created our community, Multifamily Schooled. We did it 2 years ago. And we've been having people come in, right, that have interest, that want to learn this stuff, that want to know how to source deals and collaborate sourcing deals on and off market. How do you analyze those deals correctly? So we help people analyze the deals right. How do you actually fund and finance and structure and capitalize the deals correctly, especially if you don't have a lot of capital? Not a problem, okay? Not a problem. We do that, all of it. Then how do you close the escrows and manage those things once you own them? So that is why this was created, right? That's why we did the community. Has anybody ever played this game of the 7 mountains that move a nation and inspire people? Remember I said you had to have a fire in your belly? Because money is a great motivator, but it's only going to get you so far. You have to have a burning thing inside of you that's going to get your ass out of bed, keep you disciplined beyond the motivation to get things done. So for you in here, is it sports and culture? Is it family? Not just your personal family, but philanthropy and giving back. Is it media? Is it government? Maybe like politics. Is it business? Is it educating and helping others? Is it religion? What three or four are your main mountains that drive you? And I want you to think about this. This is like a self-identity audit for you, because this is what's going to move you to like do great things. All the stuff you're talking about, wishing, hoping, and praying, I'll never forget this. So my dad has this quote. He says, I'm going to share the results real quick. He says, son, there are 2 types of people in this world. There are doers and there are dreamers. There are doers and there are dreamers. Doers take their dreams and they make them a reality. Dreamers just keep on dreaming, baby. They talk. They say what they're going to do. Bop, 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 bop. Talk away. They dream, but they never take the action. They never take the action. They're great talkers, but they're full of bullshit excuses and they just talk. Now, if that's you, fine. You can change that. You can change it today, but you have to get mad enough. I got to be honest with you. You got to get mad enough, because pleasure is not enough. Money, which is typically pleasure, is not enough. You have to get pissed off enough and mad enough about your current situation to move the needle in your life to go where you want to go. Most people make decisions and make big moves in their life based on pain, not pleasure. Pain, okay? So that's good. So to kind of give you an idea how this works. So for mine, okay? Business is the main driver. That's number 1. You have to have a successful business to have the capital to then deploy into the other passions that you have. The other one is media. Remember I said I'm not an influencer? But what I did realize, if you want to go and collaborate and partner and grow these things, okay, so you're a multifamily guy, you need to have media and growth to be able to influence, help, right? Help. And then it moves over to education, right? Which is why we're all here tonight with our multifamily schooled community and collaboration and education to educate people, help people out, which then allows you to give back to your personal family and philanthropies that you care deeply about. So it all aligns. So like when I get up in the morning, I'm like, boom, like let's fucking go, right? Strong business. We're doing the media to influence, which I hadn't done before. Now here we go. That influences the education to help people. And then it moves right back to how do we give back? How do we leave a legacy? How do we help others? Because the law of reciprocity will pay its dividends. It always has, it always will. The law of the universe, it will do it. So that is my big four. I'm not sure if that aligns with you, but those are mine. And that is what drives me every single day, okay? When I'm tired, when I don't want to get out of bed and the alarm goes off at 5 a.m. or 4:45 and I'm like, oh, that's what does it. Get your butt, let's go. And it helps you meet people. I mean, over the last couple of years, we've had a chance to meet some really cool people. I don't know if you know of any of these faces on here, right? This is Apartment Rockstar guy. This guy's amazing. Robert Martinez owns about 5,000 units out of Houston, Texas. Guy's kick-ass, right? Ryan Pineda, I don't know if you know Ryan at all. He's a big kind of real estate media guy, and he's been killing it, obviously out in Las Vegas and all over the country. And then Brandon Turner, guy's incredible out of Maui, but he started Bigger Pockets, podcast, all that stuff. Now he's got some other stuff going on. And then Mr. Uncle G, Mr. Grant Cardone, you know, whether you like him or not, he's doing incredible things. So that's that. So you got some questions?
Yeah, you know, a lot of people reach out to us about raising funds and how they're kind of scared to do it. You know, how do you think about raising capital?
Yeah, I was scared to death too the first time I did it, right? But my first one was a 27 unit in Kansas City, Missouri, and we had to raise about $895,000 for that deal. I'd never done it before. I'd never done with the legal documents. I'd never done, I thought, hey, I don't have anybody that would give me any money. I don't have enough friends. I create all the limiting beliefs that I could in my brain as to why I couldn't do it. But here's how you raise money. We're going to get into that in just a second. You have to have a deal that makes financial sense. If your deal doesn't make financial sense, you have no chance in raising money. So if your deal sucks, you're not going to raise any money. If your deal's good, the money will flow. The money will find you, right? Money loves making money. It just does, okay? So yeah, I need you to throw the limiting beliefs that you're creating in your brain that I did for myself too. And I'm going to show you how to actually do this, but that's why you come in and you have community, right? You collaborate, you partner. People raise financing and capital together, right? You don't do it solopreneur. You do it together. Does that make sense?
Yes.
Okay. Anything else?
Another one came up, you know, should I invest in my backyard or is there like a best market to go after?
That's a good one. Yeah, emerging markets. So because we were founded in California, it's not necessarily the best state, although San Diego is great. There's not a lot of other places I'd put my money in California. So because of that, we had to go out of state. So if you live in a tough state for landlord-tenant laws and taxation, then you're going out of state. Okay, you're going out of state. So it depends. It depends. But if you're in like a lot of the Midwest states, anything in the up-down, they call it upside-down Amazon smile in the U.S., and we'll get into that. And there's some other upper Midwest states that are fabulous, okay? And then Southeast and stuff like that. So we'll get into that. Is that it for now?
Yeah, that's it for now.
Okay, cool. So how do you buy apartments? Okay, so I don't care whether it's a 2-unit or it's a 100-unit, okay? 2-unit duplex or a 100-unit multifamily big complex you go drive into. It's going to follow the exact same pattern. I call it the 5-pillar method that we kind of put together. You have to know how to find and source deals. You have to know how to analyze those things quickly to determine whether it's a good deal so you can move on or not. How do you finance, capitalize, and kind of structure the deal? How do you close the escrow correctly so you don't get into a money pit for you and your investors? And then lastly, how do you manage that property? Are you self-managing that property or do you hire a third property manager? And how do you do that correctly? Okay, that is the method for buying apartments. Now we're going to dive into each of those. Now, I'm not going to get into the closing and managing side because that we could be here for like 14 hours. But I will get into how do you find deals, how do you source them the correct way, how do you analyze those deals, and then how do you finance structure them together. I'm going to break it down specifically on a deal. I'm going to give you 2 case studies tonight, okay? I'm going to break it down. But creating wealth in real estate. So honestly, this doesn't matter whether it's a business, a widget, but real estate specifically, you take an asset, okay, real estate asset, whether it's a house or a multifamily commercial building, doesn't matter. You have to borrow good fixed rate debt against it, as well as using OPM, other people's money, as well as bank money and OPM money. Bank money and OPM money, right? You leverage that, you get it to cash flow financially where the property's paying for the servicing. The property's paying for the servicing. So you are not paying for it, the property's paying to pay for the money. Cash flows. Then you allow it to appreciate. You've refinanced the property to do a cash out refinance, and then you rinse and you repeat. And that is how you create wealth in real estate. That is how you create wealth in real estate. You've probably heard of the BRRRR method, right? The BRRRR method. It's essentially that, in a way. Essentially that. The key factor is here. If you don't borrow good debt, if your financing sucks, it's going to be very difficult to create wealth in real estate. You have to have decent financing to allow this game to play. So this is why we've gotten into the pickle that we've gotten into recently in 2022, when interest rates went up through the roof and people got caught. We got caught in one of our deals. Thankfully, we're safe right now, but we got caught. There's people that are losing their butt all over the place right now because there's a lot of stress deals in the commercial space, specifically office and multifamily. Office and multifamily, okay? It's a big deal. Great question came in. Damien, you prefer not to have partners, bad experiences. It depends how the partners work together. Damien, what I'm talking about is you buy a multifamily building as the general partner who controls the deal and has all the voting rights. Because what you're talking about is being in something you lose control over and you don't have voting rights over. Different, right? I'm not talking about a pair pursue partnership. I'm talking about you're the general partner and then you bring in limited partners who don't have any control or voting rights. They're there passively because they trust in you to do it. So you have control, you have voting rights, you have all the same, okay? Much different. And then Brian said, Grant Cardone got me interested in this, and I looked in for options that I don't have to pay $30,000 a year. $30,000 a year for what? A mentorship? Is that what you're saying? I'll be glad to do that. Do a deal. I will soon have the capital, and I have a couple of wealthy friends very interested in doing it. Beautiful. I'm going to show you something that's going to blow your head off, Brian. Love it. Love it. Okay, so why multifamily? If you're here tonight and you're like, I don't know if multifamily is the right way. Let me explain why it is. Okay, why multifamily? You get paid 5 to 8 different times throughout the ownership of the building or the complex, whatever you want to call it, right? 5 to 8 different times. If you go flip a house, 1 time. You go wholesale a house, 1 time. Other types of real estate investing, 1 time, 2 time, maybe. 5 to 8, we're going to break it down. You get economies of scale. 10 units in 1 building, you have 1 roof, 1 set of walls, 1 insurance policy, 1 mortgage, 1 lot, or a lot of ones. Versus if you have 10 single family homes, 10 lots, 10 roofs, 10 insurance policies. 1 tenant leaves, you go from 100% occupied to 0. 1 tenant leaves out of my 10 unit building, I go from 100 to 90%. I can still pay my mortgage. Big difference. Easier to finance because the banks are using the property's financials, remember, to service the debt. They're not using you, the property. So you are less important in the process, okay? Generational wealth. You pass it on. I mean, what I'm going to be able to pass on, my kids are going to work for it, but what I can pass on is unbelievable. It's all about that, right? This is what people care about at the end of the day. They really, really push for this, okay? So that is why multifamily. So finding deals. As most people in here said, I'm a novice, I'm this, I'm that. I have a 9-to-5 job. I have something else that's earning me income, okay? So I have a certain amount of time that if I chose to, I could dedicate to this game of buying multifamily. Okay, so I need to keep things realistic. So if that's the case and you have limited time, let's call it right now, I have 4 to 8 hours a week that I could actually, if I wanted to do this and learn it, remember, check equity or sweat equity. Check equity or sweat equity. You're bringing one of the two to the table, physical cash or the skill sets and the ability to execute, right? You decide. But if I'm sitting here saying, okay, I don't have a lot of check equity, so I need that. I want to learn so that way I have the, right? I have the sweat equity. If that's the case, this is the game. And I'm going to explain why. And if you're a new person, for you to go to someone like me and call me up and send me letters and do all this stuff and go direct to the sellers to try and find deals, it works. But the amount of time, energy, and capital outlay that you're going to have to put into that to get started is overwhelming. You don't do that in the beginning. If you have a certain amount of time, 4 to 6 hours a week right now to get started, you do the direct to broker game. It's exactly what we did to get started. I'm going to break this down, but that's how you do it, okay? Direct to broker. And here's how you execute that plan. You are going to leverage the broker's on-market deals, and William was just talking about this, to get access to their pre-market or off-market inventory. So William was just talking about this. He says, I have a great deal flow from 2 brokers, blah, 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 to work with. Okay, so brokers have their on-market deals, which are on the websites. So if you go to LoopNet, Prexy.com, CoStar, any of these commercial websites, By the way, Crexy.com is the best one. Okay, great data, very good, accurate. Obviously, CoStar if you want to pay for that, but it's a free marketplace. Crexy.com. Okay, you leverage the brokers because the brokers are saying, hey, look at me, I have on-market deals, but that only represents about 40% of the game, guys, because 60% of the market you never see. These are the pre-market deals. These are the deals that the brokers have signed. Give you a perfect example. We are selling one of our 30-unit properties right now, pre-market. We have a listing agreement. The broker has an OM put together, a nice marketing piece that shows the deals. He's shopping it amongst his database of people he's made connections with right now to get a feel for where the market's at for our deal. It's not even here because it's probably going to sell here. So then the question becomes, great, Justin, I know this. You're not telling me anything I don't know. The question is, how do you get access to that? You leverage their on to get to their off. Let me give you an example. On our first 2 deals we ever got, Kansas City, Missouri, once I identified that Kansas City was a market we were interested in, I went on Crexy.com. I found 3 properties that were on the market with 3 different brokers, and I had a phone call like this. Hey, John, how are you? It's Justin Brennan with the Brennan Group Capital. Hey, I'm calling on this deal on 123 East Main Street. 23 units, look like it came on the market a week ago. How's the activity? Okay, pretty good. Okay, awesome. Do you have any active offers on the market right now? Okay, no active offers. Awesome. How are you guys doing showings? Are you doing private tours or group tours, and when are you doing it? Okay, so you're doing private showings? Okay, great. Anything specific? Why is the seller selling, or anything going on with that deal specifically? And blah, 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 make small talk. Okay, great. Look, I'm going to be out there in about a week. I'm going to be touring a few deals in Kansas City. We're going to be buying in this market. So I'd love to come by, meet you, tour the property, and get a better look at it. Okay, fair enough. Now, they may ask you a little bit of back and forth, some other questions, small talk stuff, but that's nuance that we obviously can, educate people on, right? But that's how that's going to go. Because what's going to happen in that tour with that broker is, like William does, shake hands, right? The more money you make, or the more hands you shake, the more money you make. Remember that, right? The more hands you shake, the more money you make. How you doing, Mr. Broker? Tour the property. Hey, look, I've done the financials on this, John. It doesn't look like this thing's going to work out. The seller wants X. Our underwriting says it's X minus. These deals, I'm not, this. I'm not telling you anything you know. I can't even write. By the way, I had like a dislocated shoulder, so we're healing. We're healing. Almost there. 95% of the time, this deal is overpriced and doesn't work. And you know this, right? Because you're probably looking at these deals on the websites and you're looking at them, putting them in a deal analyzer, and they all suck, right? That's the reason they made it to the websites, guys. Because they didn't sell here. All the broker did is put it on the actual website to see if some schmuck would overpay for it here. That's all that's happening. It started here, didn't sell. They move it over, see if a schmuck buys it here. So you just need to, right, reduce it, negotiate here. But 95% of the time, all the deals over here are overpriced. All of them are overpriced. So that's why you're getting frustrated, right? Because you're not seeing these deals. But you have to leverage the on to get to the off. And that is how we did it. That's how we got our first few deals. Sometimes you get a pocket listing before they put it out. Yeah, pre-market, baby. That's how we do it. Pre-market. But there is a little bit of a nuance and science to how you do it, right? Especially if, maybe you're very introverted, you don't like to talk to people, right? Listen, you're going to have to do a little bit. Some of the best multifamily guys and girls, right, are engineers. So if you're a very analytical brain that actually overanalyzes things, that's a good thing. The only skill set you're going to need to learn is you need to get to the edge of the cliff, right? Do all the calculated risk you can do, and then you got to jump and allow the how to show up, because that's what's holding you back. Paralysis by analysis game. But you actually are very good at multifamily, and I know this because I'm a C-type personality that tends to overanalyze things. So I had to get to the point where I'm like, okay, I've analyzed this thing the best I can. Everything I've done, I get it. I got to go. We're either yes or no. We got to go and allow the how to show up, okay? Because you get into this game and you don't want to get paralysis by analysis. But that's how you're going to make it happen, okay? Beautiful. Let's keep going. So how do you analyze deals? So we just talked about how you find deals. Leverage on to get to the off. On to get to the off. There's nuance in that, but that is the high level, okay? How do you analyze deals? You're focused on the NOI. It's real simple math. Remember, a multifamily apartment building is its own operating business. It has a profit and loss statement. Net operating income, okay? Net operating income. It's the most important number because that combined with a capitalization rate is how people determine value. It's not about how I feel. It's a financial decision. Numbers make sense or they don't make sense. It's not like, oh, that's nice. I like the white colors on the building. That's itself for that. It's not a comp game. I'm not comping it to other properties per se. It's all about the financials of it, okay? And the power of NOI. If you simply raised the net operating income $1,000 a month or $12,000 a year, you will add $220,000 in value right to your pocketbook. For every $1,000, you can boost the net operating income per month. So let's say you had a 10-unit building, right? You boost the rents $100 per month. On a 10-unit building, that's $1,000. You're just taking that 10-unit building and you just added $220,000 to it. Okay? The beauty of NOI. Okay? The beauty of NOI. So, what makes up a good deal? I get this question a lot. What makes up a good deal? Very simple. And these are numbers you can chime in the chat on what the heck these are. Internal rate of return, IRR. It's basically what is the velocity rate of return on the building and my money. It needs to produce a 14 to 20+% IRR on the money. This is for your investors, you and your investors. Just think about it. If I came to everybody on this thing tonight and I said, hey, I have this 18-unit deal apartment building. Projected returns are about 18% a year on your money. You're going to get a 8% cash on cash, preferred return of 8%, and an equity multiple of, say, 2x on your money. So if you give me $100,000, you're getting $200,000 back. Okay? Who do you know that may have some interest in this type of a deal? And you're going to be like, well, I may have some interest. Like, can you send me some more information? Sure, I can. Here's your pitch deck. And the pitch deck simply describes what the deal is. We're going to get into that in just a second. But that is what makes up a good deal. It's all about the numbers. IRR of this, cash on cash of this, equity multiple of that. We have deal analyzers. The deal analyzers that is literally in that multifamily toolkit that I sent you guys the link on in the very beginning. Okay. So how do you make money? Because I get this question a lot. Justin, I love multifamily. This is great. I see it. I want to do it. But how do you actually make money if I'm going to be a syndicator, right? An apartment investing guy that goes and buys apartments with my money and with other people's money, OPM, right? How do I make money in that process? Here's how you do it. Way number one is an acquisition fee. This is a one-time fee paid at the close of escrow, typically 2 to 3% of the purchase price. Asset management fees. So different than property management, asset management. So you're not doing the day-to-day property management. You're going to manage the managers, right? You're now a CEO of your own company, guys. Asset management fee, which is 1 to 2% of the revenue pumped out by the apartment, okay? You're going to get typically 30 to 40% of the cash flow pumping out of that thing monthly. 30 to 40% of the profits being pumped out of that thing when you sell or refinance. 30 to 40% of all the tax write-offs to offset on your income so you don't pay Uncle Sam a dime for the rest of your freaking life. Okay? Construction management fees. Let's say you're going to renovate the building. Okay? You're going to do some renovations. Great. You can earn a 5 to 8% construction management fee while the renovations are going on based on the cost of the renovations. Disposition fee. This is down the road when you go sell the property for you and your investors. You can get a fee of 0.5 point to 2% on the exit going out the door. In addition to the brokers getting paid, you get paid too. So in multifamily, if you're great at finding deals, okay, you can get paid 1% of the purchase price. I mean, we have pre-market guys find us deals. Like there are people out there that are really good at sourcing deals. They bring them to the table. They get a piece of the ownership, small piece of the ownership, plus they get a 1% fee. Now think about it. That's on a $20 million apartment building. That's $200,000 for simply making an introduction. That's a big deal, right? 1% typically, okay? Plus you get a piece of the ownership, okay? So how does this break down? Like how do all these fees and ways to make money break down on a timeline? Well, as I mentioned, the acquisition fee and the finder's fee get paid up front right when you close the escrows. That's like day one, okay? Then you get all these little cash flows and all this money flowing through month, right? Everything. Then you may do a refinance of the property about halfway through, maybe year 2 or 3. Then you're going to hold it a little bit longer. And at some point, you're going to sell this baby, whether that's year 3, 4, 5, 7, 10, whatever it is. And you get this big pop of profit. So there's multiple ways. So all these ways I mentioned are all happening typically over a 5 to 7 year window of ownership. Okay. There's monthly stuff and then there's big pop stuff. So you're getting paid a lot of different ways in owning multifamily. That's why you do it. Remember what I said. Your income is directly equal to the problems that you solve. If you solve $1,000 problems, you're going to be paid thousands of dollars. If you solve $100,000 problems, you're going to get paid hundreds of thousands. If you solve $1 million problems, you get paid millions. That's why you do it. Okay. You know, I love charity, but I'm not here for just charity. Remember, successful business that allows me the end game of helping people, right? So that's why you do it. And then Johan said, for commercial real estate loans, are they fixed or float? How many years? Ballpark? Okay. They're both. They're fixed and they float. Depends on your deal. In your case right now in this marketplace, ideally, you're just going to buy more of a stabilized asset. So it's going to be a fixed rate interest rate. Okay. But if you're doing renovations and construction, then during the term of the renovation and construction, it's float. Then it moves into a fixed rate. Okay. And how many years? Commercial real estate is much different than residential. You go get a residential loan on your house, it's 30 years, right? 15 or 30 years. Commercial real estate is 3, 5, 7, or 10. 3, 5, 7, or 10-year term. The payments are amortized over 30 years, but the term is 3, 5, 7, or 10. Okay. Keep moving through. Want to be respectful of your time. We're going to go a little bit over tonight, but hang in there. Remember, I'm giving you some weeds, some real information tonight, not just a bunch of fluff. So raising money. So remember, we went through finding deals, analyzing deals we just talked about. Now, how do you raise money? How do you raise and structure and do deals? Okay. Remember what I said? To raise money, you need a deal that makes financial sense. So it's got to meet this metric. If it does not meet this metric, you move on. Don't try and fit a square peg in a round hole. It ain't going to work. It is not going to work. We had to walk away from a $800,000 deposit on a deal in 2022 because we got to this point. We went into the deal and it made sense. Interest rates went up. The deal didn't make sense. It wasn't easy to raise money at that point, right? It was not easy to raise money at that point. So we had to walk away. So a deal that makes financial sense. Then you need a pitch deck. So a pitch deck is simply a nice little fluff marketing piece that's put together that gives people, potential investor, anybody interested in your deal, the lay of the land. It tells them what the property is, tells them what's the minimum investment to get involved, how much money you're raising, how much the returns are for the investor, how much money am I going to make, and when do I get my money back? Pretty much lays it out. So that way it answers 95% of all questions for an investor or anybody that's interested. So that way the only conversation you're really having, right, is do they like you, do they trust you, and maybe a couple little nuanced questions about the deal. Like I'm dealing with 2 deals right now. We're raising about $3 million for a deal in San Diego, another at least $500,000 to $1 million for a deal in Texas, right? And I have 2 pitch decks out to our community and what we're doing, and I'm talking to investors as we speak and people we're talking about, okay? So a deal that makes financial sense, a good pitch deck that describes it, and there's a pitch deck in that multifamily toolkit, a nice little templated one for you, one of the best you may ever see, totally free for you coming on tonight. And you need a nice process so that way an investor says, hey, dude, I want to give you 50 grand. Like you need to be able to take the money. So a process for it. Okay. So that's how you raise money from a high level. Now, of course, there's nuance in this and there's tools and systems and organization and all that stuff to do it. Not a problem. If you want to know more, if you think you can do it on your own, by all means, go for it. If you need like help, we can help you. Okay. So let's get into an actual structured deal. Okay. I know it's a lot of writing on the screen. I will break this down for you. Just want to make sure I know what it looks like for you. And the presentation actually located in Texas. Awesome. Ooh, this is a great question. I want to do 50 plus unit deals. Why would I start with a 10 to 30 unit? Here's why. Anybody that ever comes into any of our community and everything we do, and like no different than I started. Okay. I started our first apartment deal, multifamily apartment deal was 27 units. Here's why you start under 50. Okay, I understand why people tell you to go over 50 because economies of scale. but you have a better chance of breaking into the White House than you do of taking down that deal, okay? You can take down, everybody here can absolutely 100% take down a 10 to 30 unit deal on your own with conjunction with OPM. You can absolutely do it, okay? 100%, because it's a small enough deal. You're dealing with more mom and pop brokers, mom and pop sellers. You're dealing with lenders who deal with newbies. If you're a novice and newer to it, they'll deal with you because they know that that 10 to 30 unit space is where a lot of newbies or newer people operate in. And then, like you said, you get your teeth cut, right? You get into it, and then you get some confidence, right? And then you have all that laid, and then you go. Then you can go big, okay? But that's why you do it. And that's how we teach it, because I know that it works, right? I mean, we literally have probably a half dozen people in our community that were in other things, and they were told to go big, and they didn't get results, and they were pissed, and they spent a lot of money, by the way. And they're like, oh, and then they ended up coming this way, and they're like, okay, let's go and execute, because it makes sense, okay? So let's break down a 10-unit deal, $1 million deal, 10 units, $1 million deal. That's $100,000 per unit. Okay, you can see most of those deals anywhere in the middle part of the country, anywhere outside the coastal zones of the United States. This can happen, okay? So let's break it down. You're going to go out and get a 70% loan, about $700,000 coming from a bank. Now, getting this loan is easier than getting a $300,000 house loan. Why? Because the bank, remember, is underwriting the property. They're making sure the property can pay for the servicing of the loan and pay the loan every month, not you. Okay, so now you're left with $300,000, and you may be saying, well, Justin, I don't have 300 grand. I understand you may not. But here's how you actually get into it and control it, have full control, voting rights and everything for a few $1,000s out of pocket. You are going to come in with about 10% of that money, about 30 grand, okay? The OPM that we talk about, other people's money. This could be the seller helping finance your deal. This could be a private lender helping finance your deal. It could be friends and family trying to finance your deal, right? They can come in with OPM. Other people's money means other people's money other than yours. So many different ways for this to happen, okay? So you have 70% loan, 30% is the equity, if you're following the math. Now, here's the cool thing. You are coming out of pocket with 30 grand. But remember, I said you get paid 5 to 8 different ways? Your first one is coming to you at the close of escrow. You're going to have Peter pay Paul. So you are going to get a 2 to 3% acquisition fee for putting the deal together for you and investors. That's $20,000 to $30,000 on $1 million deal. You're out of pocket 30 grand. You're getting a check literally the day you close escrow for 20 to 30 grand. So how much money are you out of pocket? Are you following me? And we're just getting started. So let's break down this deal structurally, like legally how it would structure. So you're going to have an LLC for the building. Let's say it was a 10 unit, not a 20 unit, 10 unit, okay? You're the general partner. You're the big daddy. You're controlling the deal. You have full voting rights and control over it. You're bringing in your 30K. For that, you're going to get about 30% of the deal, like the actual cash flows and profits and everything. But you have 100% control. 100% control. And you're getting an acquisition fee and all the other stuff that comes with it, okay? Your limited partners are all your other investors. This could be the seller. This could be a private lender. It could be other people involved, blah, blah, blah. Breaks it all down. They are going to bring in 90% of the money. You're bringing in 10% of the money, okay? They're going to get about 70% of the deal in cash flow for bringing in 90% of the money. Plus, they're going to get a preferred return of 6 to 8%. We can get into that if you guys want to. Okay? All your other investors are located here. Boom, 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 boom. On a typical deal like this, just to give you concept, you'd probably have to raise, think about it. You are bringing in 30,000. You're going to raise 270,000. To raise $270,000, while most of you may be sitting here going, oh, I can't do that. Yes, you can. If you have a deal that makes financial sense, you have a pitch deck that describes the deal, trust me, somebody knows somebody that knows somebody. You will get this done, and you'll probably get it done with about 5 people. So you have full control, and then 5 other people are giving you checks because they want to make money too, and you're helping them. So because of that, the deal makes sense and all works, okay? Michael, you're 100% right. Michael put in here, I was told it's the same amount of work for a 10 unit as it is for a 100 unit. No, that's not true. But a 10 to a 50, yeah. Once you get up into that echelon, there's a lot of nuance. You start getting into 100-unit deals, or even north of that, okay? But you're not too far off. So yes, that is why when people tell you to go bigger, I get why they're saying that. But there's a difference between wanting to and being able to execute and actually make it happen. I'm trying to let you guys know that if you really want to do this, it can be done, but you need to do it the right way and not do it how gurus and influencers are telling you how to do it, that, you know, they don't. I'd be shocked to see how they actually pulled it off, because I guarantee their first deals, they either were partnered with people that had executed at that level, right? Or something had happened, because you don't go get a 50+ unit deal alone if you've never done it before. Ain't going to happen. Lenders aren't going to talk to you. Brokers aren't going to talk to you. Sellers aren't going to talk to you. You have no chance. You could literally go break into the White House tonight before you're getting that deal. Guaranteed. Okay. That's the truth. Is getting OPM executed a hard skill to learn? No, it's not. Remember, once again, you don't have to do an enormous amount of work if you have a deal that makes sense. Now, that OPM is really hard when your deal sucks, right? If your deal is not very good, best of luck. You're not raising money. But if your deal makes financial sense, guys, remember, if it comes in and it's raising 14 to 20% annual returns on your money, 6 to 10% cash on your money or more, and a 1.8 equity multiple or more, raising money is not that hard. Think about it. If someone, because this is how it works in the brain cell of anybody here. You're saying to yourself, okay, I have money in stocks, I got money in bonds, maybe some crypto, own a little here, a little there, but I'd really love to own some real estate. But I'm getting 6, 8, maybe 10% over here. So in order for me to take some risk over here in real estate, that return has to be pretty decent, right? At least, you know, in the teens on my returns, okay? So it's opportunity cost of money. So you can't have a shitty deal and expect people to invest into it. They're just going to say, no, I'm going to stay safe over here in my little bond department, right? Or whatever else they got going on. I'm not coming over here because that deal is not, the opportunity cost of that money is not good enough. You have to have a deal that makes financial sense, and the money will flow. Money will chase your deal if it's a good deal, okay? Always has, always will. And then a good pitch deck to describe it and a process to bring in the money. But we teach all that stuff. All the community, everybody's helping each other out, holding hands, raising capital. I mean, it's not that hard, but you gotta believe it. You gotta believe it. Don't worry about it. I didn't have any contacts either, Kishore, when I got started. Remember what I told you in the beginning. I raised $895,000 on my first deal. That was a syndicated deal, right? Syndicator, where it was a 27-unit deal in Kansas City. And we raised it with 7 investors. Okay? I put one email together, shot it out to 57 people with a pitch deck and a deal that made financial sense and a process. When people said, I want to give you money, I had a process to bring in the money. Those 3 things, we raised the money. 57 people went out. People knew people knew people. Because some people did say that, I'm not interested, but I'll send it to my friend. People know people that know people. Trust me. If you have a deal that makes financial sense and you have a pitch deck that describes it and you have a process to bring in the money, you will raise the money. You will raise the money. But that's how that thing's going to break down. Okay, let's keep going. Make sure, here we are on time. So give me about 15 more minutes and we're done. Okay? But hang in there. Because we're not going to talk about closing. We're not going to talk about managing. That's for a whole other topic. Let me break down a case study for you. This is an actual deal that I did. Okay? Actual deal that I did. And yes, Matthew, it was through my contacts. Yeah. So I had a little, once again, soft commitments. Because you have to realize that, listen, you have to, if you're going to be an entrepreneur, because I don't know what you do for a living, but if you have a 9-to-5 job, this is part of the mental leap you're going to have to do for yourself, okay? You're going to have to make this leap. Because if you're going to be an entrepreneur and a business owner, which is what you do when you get into real estate investing, you're an entrepreneur and a business owner. As part of that process, okay, you have to get into the mental leap that you're going to have to, say hi to people. Once again, the more hands you shake, the more money you make. If you don't like to talk to people, this could be tough. Then you probably need to partner with somebody that is okay talking to people, because you're going to have to talk to people. That's just part of it. But it's easy to talk to people if you have a deal that makes sense. It's hard to talk to people if your deal sucks. So as long as you have a deal that makes some financial sense, you got to get out there and say hi. I mean, you can't be a hermit in the corner. That's not going to work well for your life, period. So you have to get out of the shell. Okay, that is a skill set right? As an entrepreneur, if you're moving from the 9-to-5 world and you're going into this entrepreneur world, you've got to get comfortable with shaking hands. It's just the way the world works. It's no different than I raised $50,000 at Trader Joe's the other day. Kid you not. I'm in the checkout aisle, talking to the clerk, small talk. She's asking what's going on, how my day. I'm like, oh, I'm just finishing up some meetings and stuff. She's like, what do you do for a living? I say, I'm a multifamily investor. We buy and sell apartments around the country, and we do it with investors. And she looks at me, she's like, oh, like that's pretty cool. She's like, where do you do it? And I said, I name the states we do it in. She's like, you know, I was actually talking to my brother the other night. He's looking to invest in real estate. He just doesn't really know who to talk to or how to do it. Like, can I connect you guys? I said, absolutely. She connected us on a 3-way text. I had a conversation with the guy like a week or two later, showed him a deal, 50 grand. The deal made sense, had a pitch deck, and had a process. Okay, we can help you. Absolutely can do it. 31 unit deal, $18,000 out of pocket. Let me show you how this broke down. Actual case study, okay? We bought the deal for $1,525,000. We put about $400,000 in renovation into it. Closing costs, right, which included the acquisition fees, legal, title, escrow, all the closing costs, right? About $225,000 for this deal. We were all in at $2.150 million bucks. Okay, we went out and got a loan for $1.5 million. This was easier than getting a $300,000 house loan because the deal made financial sense. The bank saw it. They're like, this is great. It pays us our money every month. Sweet, here's your money. Okay, 70% loan. Remember, equity, that's the down payment. It's our cash into it now. We had to bring in $645,000. Obviously, I didn't have all that money, but I could bring in 10%. That was 64 grand. Brought in 90% from about 7 or 8 people on this deal. 581,000 was raised. Sent out some emails, talked to some people. People knew people who knew people. Average check size was between 25,000 and 75,000 was the average check size from an investor. We raised that 581,000. We had some big check writers that brought in like 200,000, 225, and then everybody else was smaller check writers. Okay. Now remember, you get an acquisition fee. I got an acquisition fee of $45,000. I brought in 64. I got $45,000 back the day we closed escrow. I was physically out of pocket $18,500. Physically out of pocket. And I had control of a 31 unit, $1.25 million apartment complex. Now, what did I get? Now, when we renovated that building, remember we put 400 grand into it. We were able to take, because this was like a home run deal. Like this is a borderline home run. They're not always this good. We took from $1,525,000, we boosted it up the value to $3.6 million bucks. We did 100% cash out refinance of that property, got all of our money back out of that property in 24 months, paid back the investors, and now we're sitting with house money. Remember, you get asset management fees. I was getting paid an asset management fee of 1% on the revenue per month. I was making 40% of the profits and the cash flow coming out of that property every single month. So $2,000 a month for 5 years is $120,000 bucks. Then I got net profits of $470,000. So on my $18,000 investment, I made $590,000 in cash. I mean, you can tell me if that's a good ROI. And this is not abnormal. The only thing abnormal was the value of the property when we rent out. Because normally you'd get like a jump, maybe 2.5 million. We got a big jump on this one. It was a big deal. What kind of, oh, great question. What kind of credit score? If you have a credit score over 600, you can get a loan. Okay. Once again, the banks aren't looking at you nearly as much. They're looking at the property's financials, the property's ability to pay them. As long as you're not a fraud and you have a reasonable credit score. The average credit score in the United States of America is 645. 645. So you need to have an average. You can have 600. That's below average and still get it done. But in the 5s, you're going to have a problem. Because that means you can't take care of your shit. Excuse my language. If you have under 600 credit score, I'm not trying to knock, but you need to get your stuff together. Because that's, I mean, come on, let's go. Okay? I mean, if you want to do stuff in life, you can't be hanging out there. You got to get into the 600s or more, and you can operate and make a lot of things happen. Okay? That's just keeping it real. Just keeping it real. So, beautiful. Let's keep it going. Okay? I want to kind of keep everybody happy and what's going on here. So it took me 3 deals because we went from, just to give you an idea, actually 4 deals, 27 unit, 31 unit, 50 unit, and then 121 unit. And after the 121 unit, I quit my real estate job. I was a residential real estate luxury realtor in San Diego. Pretty much quit it. And I haven't operated in that space. You know, I randomly sell a house here or there, right? But only like to past clients' sphere of influence. But I ended that in 2021. Okay. And it took me about 2 to 3 years to make that transition out of, say, the 9 to 5 or your traditional job into full-time multifamily investor. It took me 2 to 3 years to do that. And you can do the exact same thing. Okay. So yeah, you're right. Once the income starts to overtake it, then you can have a decision to make, right? But that's what everybody's seeking here. That's why you're in here tonight. Okay. So yeah, and like I said, we have that community, multifamily school community. So in the entire job is collaboration. It's partnerships. It's doing things together, because you don't do it solopreneur. It doesn't happen. I'm not getting to 10,000 units trying to do this alone. That's why the community was created. Because I said to myself, what if we could create a community of well-trained investors around the country, right, who are sourcing deals together, raising capital, partnering and financing together, right, learning together, collaborating together, events together, things together, and they're well-trained. And then what's going to happen is you're going to get in and you do your first 10, 30 unit deal, maybe your second one, right? And then you're going to be like, dude, let's go bigger. Great. Let's partner, because that's going to maybe help us grow, because you're not going to be able to take down 100 unit alone. You're going to want co-general partners. We can be one of those partners if you choose. Totally up to you. But that's how we can grow. So it's a win-win. That's the whole concept. But you have to have the community of well-trained investors doing it around the country. Otherwise, it doesn't work. Okay? That's why we're here. That's why we're doing this. Kind of find out who's interested. So last question came in. Do you make the offer with a long due diligence period, then go round up your investors? Yeah, so let me show you how this actually works. So typical escrow periods are 60 to 90 days for when you're buying these things. Your due diligence period is typically 30 days. Okay? You'll have about 45 days to raise a lot of your money. But the way it works is, by the end of your due diligence period, you'll want to have about half of your money committed. Okay? And that's kind of the stuff that we teach. As long as you're committed with at least half of the money, you keep going. If you haven't raised any money, well, that probably means your deal stinks. I'd be shocked. That hasn't ever really happened. I've yet to have that happen. On a deal that makes sense, I've yet to have that happen. And nobody in the community has had that happen either. Like, that just means your deal's not that good. So yeah, we have not had that happen, because as long as half your money is committed at that point through your due diligence, then you keep hammering away and you go, and you'll close the deal. You do not need 10% for that, because typically you'll put down a 1% deposit, okay, to lock up the deal. 1% deposit to lock up the deal. Beautiful. Okay. So inside the community, we've created something where we basically create a business in a box. So I don't know if anybody has an LLC form for your holding company, if you have a little website, if you've even thought of any of this stuff. But basically having, you know, a CRM, right, where you can actually bring in investors to it that you can put in to get soft commitments. CRM, website template for your newfound real estate investing company. Forming the LLC. So you are officially official, and you have a business card and a logo, and you're ready to rock, baby. Business in a box. Helping you source the deals. Helping you with the financing and capital side. I don't know if anybody does 1031 exchanges in here, but we have a lot of potential people that say, hey, I have a 1031 exchange. I got to move deals and money and properties. Great. Inside the community, it can happen, right? Have deals, right? Have deals that you want and find buyers for. So we have a lot of people that, like, they're great at finding deals. Like, they're real good deal finders. They just don't have buyers or people with capital to buy the deals. Well, if you're inside the community and you're a great deal finder, heck, if you don't even want to do syndication, if you don't even want to be an apartment investor, fine. Be a great deal finder. You can make a ton of money and have a bunch of little interest in all these deals if you're a good deal finder, right? So I'm also mentoring people inside the community, because what I didn't want, right, which I've seen happen a lot, is people go into these communities and then they're taught by other students who have done like one deal, or they haven't done any deals, and they're not actually practitioners. They're not out in the market executing every day. Like I said, I'm not an influencer. I'm a multifamily guy, right? So, but I realize that now I have to raise my influence to help educate, right, through media and help people. So I'm going to be the one mentoring you in a small group setting every single week. It's me, not hired people, not random little students that aren't doing deals, me, okay? So that's what's really cool. We have an accountability system built into it. Community partnerships, right? Nationwide, because students and people in the community are starting to do deals together, collaborate on capital, collaborate on financing, collaborate on putting things together and taking down deals, even larger ones. So that community partnership is critical. And the key point, it's a lifetime thing. So there is no sunset, right? Of course, you don't have to do anything, but when you're in for life if you want. So that's the key component to it. So that is the community.
Great. A question came up that with syndications, isn't it regulated by the SEC?
Yes, it is. Yes. So it depends on if you're doing a full-blown syndication or not. So just to give you the difference, if I am doing a deal and I have people that I know really well close to me, and it's maybe 3-4 other people, I don't need to necessarily do a full-blown private placement memorandum and syndicated deal involved in the SEC. Okay. You can do that privately just with an operating agreement with an LLC. Now, if you're going to go do what we do, and we teach this as part of the community, so first of all, don't freak out about it. It sounds scary and complicated, but it's really not. It's really not. But yes, you will do a private offering, and the SEC does regulate that stuff. But inside the community, we provide all of the information, tools, legal documents, all that stuff. So in the process to do it. So and we teach it left and right. So it's not hard. It's a skill set you have to learn, like anything. Yeah. Did I answer that question?
Yes.
Okay. So yeah, Jabbar, awesome. Julian, awesome. Thanks for the showing your info and your interest in it. Love it. Yeah, if you have any interest in it, put your name, email, and stuff in the chat, and we will. Ernest, yeah, awesome, man. Guy, beautiful. Matthew, beautiful. Yeah, if you guys have interest in this, and let me kind of, I'll just break it down for you, but what I want to make sure of, and the key to everything is don't allow money, because people say, oh, I can't raise capital, or I don't have capital, or I can't invest it. Trust me, you will find a way, okay? But that's the key to it. Because yeah, this isn't for everybody. Obviously, it's, we have free tools and systems and everything that you can garner and use, not a problem. And if you're smart enough to go take this information tonight and do it on your own, by all means, go for it. I want everybody to win. But if you want this and you want it done well and you want it done right, like I said, all these things included, business in a box, helping you source deals, financing capital. You want to do some 1031 exchanges? Sweet. If you have deals and you want to be a great deal finder and you need buyers and capital for it, boom, you can be an amazing deal finder and make money. And then you get me to mentor you in a small group setting every single week, okay? Accountability, and then the community partnerships nationwide and lifetime, right? I think this is a more fancy thing for, let me kind of show you this. Because this is part of our community mentorship. And you can look at it on the links. I'll send it to you in just a minute. But just to kind of give you straight up what it is, right? So we have everything garnering from $1,000 opportunities for you to kind of come in, all the way up to our full-blown mentorship program that's $8,800. Okay, so once again, don't allow the money to freak you out or scare you. What I care most about is that you believe will get you a result, because that's the critical path, right? You have to believe it's going to get you a result. So we can set up an informational call. Team and I can talk to you about it, see where your current situation's at and where you can go and what's going to be customizable and best fit for you. Okay, so don't allow the money to freak you out, right? Obviously, if you want to come in, just so you kind of know, here's some kind of prerequisites. You need to be able to have $15,000 to $30,000 available to you to actually go invest into a deal. Like if you found a deal next week that made financial sense, no different than I showed you the deals tonight, could you put in $15,000 to $30,000, control the deal, knowing full well you're getting money out of it too, right? But that's a prerequisite. You got to be able to have that. You have to have some capital. The facade in the marketplace that you can do things with no money out of pocket, nothing down, show up and you get real estate. Listen, they're not lying to you. It is technically possible. It's just not realistic. Okay, there has to be some capital. The main reason for it is this. If I came to everybody on this thing tonight and I said, hey, look at this 20-unit deal I have, and it's going to return 18% a year on your money, and blah, blah, blah. And you're like, Justin, I love it. This is great. I'm in. And then I say, great, man. And then you ask the question, hey, Justin, by the way, how much are you guys putting in the deal? Like, how much are you guys investing? And if my response to you is 0, what do you think you're going to do? How much confidence are you going to have? Very little. So that's why some, even if it's a little, has to be invested into the deal. Okay. Now the community itself, like I said, we have things ranging in here. It just depends on what is most needed for you. Okay. So don't allow this to kind of do anything, right? But I like to lay it out so you kind of know, hey, listen, yeah, it's a paid deal if you want to get involved in the real deal community, but focus on the result, right? Can this get me to where I want to go in 2025 and what I'm trying to accomplish? That's goal number 1. And if it can, you feel it can, this is irrelevant. It's irrelevant because if it can make you millions, it's irrelevant. You just need the belief that it's going to happen, okay? And this happens every day where people are coming in going, okay, I get it, I see it, collaborate, partner, raise capital, finance, structure deals, find, source deals, all of that. It's a critical component, okay? So I want to open it up into Q&A. And also, by the way, too, for folks that actually come into the full blown, and pay in full, we actually give you a discount, just FYI, just so you're aware of that. But ranging from 1,000 to that is where we're at for the community stuff and tools and all the stuff we can offer you. It just depends on where you're at and where you want to go. We can help you either way, okay? But it is designed with the entire premise and goal is to have well-trained investors in a community collaborating, sourcing deals, right? Analyzing deals, finding and capitalizing deals and structure them, closing on them and managing them. And you have to have a well-trained community in order to do that. So that's why it's critically important that you know what you're doing, which is also the main reason that I am the one that trains you. Okay? I am the one that's going to train you. It's not going to be hired people because I know that this has some complexity to it and you need to be trained well and you need to understand nuance and you need to be able to have access. Everybody that comes in the community, they get my personal cell phone number and my email, period. Because I want to make sure that people, if there's a problem, we can handle it. That's how we roll, okay? I want to answer a couple questions here. If there are membership levels for the mentorship, oh, wait, hold on. If there are membership levels for the mentorship or for joining the community, can you let me know? Oh, you know that now. So cool. But so to kind of recap for tonight, what we went over, okay? What we went over. We went over these 5 pillars. We didn't touch on the last 2, but focused on the first 3, which most people quite honestly get stuck here, right? How do you source deals? How do you analyze them quickly to determine whether it's a good deal? How do I finance and capitalize and structure it? Like that's where 95% of the people get stuck. And then because once you're there, it's like, okay, I'm home run here. I can figure this out. But either way, the community and what we do focuses on this 5-pillar method and we hold your hand the entire way. And I am involved in the mentorship because I don't want people that are not practitioners teaching you. It just won't work well. Won't work well. Do you help? Hold on. This is actually a great question. Do you help find that first property in our home state or could it be anywhere within the country? Anywhere within the country. So one of the first things that happens when you come into the community, Johan, is we'll business plan. So you'll have an onboarding, we'll discuss things, we'll say, okay, what market are you in currently? And if you're in a good market, right, if it's a good market, right, then we're going to advise you to stay in your market, in your backyard. But no different than I did. I was in a bad market, right, very expensive, and landlord-tenant laws and taxation in California is rough. So we had to go out of state, okay? So it depends, but either way, we can help you. Doesn't matter. And then Tim, you'd asked, could you please repeat what you said about goals and writing them down at the start? Yes. So what you should be doing between now and the end of this month is you should write down your top 10 goals on a piece of paper. Okay, I write them on a whiteboard that's in my bedroom where I stare at them every single morning I wake up, my top 10 goals for the upcoming year. Then I take those goals and I put them in a vision letter to myself. And I write that vision letter in the future tense 1 year from now. It is December 31st, 2025. I've done this personally in my life, right, with my family, whatever it is personally. This is what I've accomplished professionally in my life. And this is what I've accomplished with my health, wellness, spirituality in my life. in 2025. And you write that in the future tense and you be very detailed. Be very detailed. I want like actual freaking numbers and specifics, not generalization. And it's 1 page, okay? 1 page. And you write that to yourself. And then you stick it up somewhere where you can see it every single day and you can just breeze over it, breeze over it, breeze over it, breeze over it. Watch what happens. I'm looking at mine right now from this year. I think I crossed off almost 90% of what I put in there. You're not going to get it all. It's not the point. But I got most of it. And it's wild. Especially when you start reading it to yourself. The universe does some weird stuff, guys. I'm just telling you. Okay? Does some weird stuff. Kenneth, if you live in Houston, Houston's a good market. If you don't live in Houston, Houston's not a good market. To answer your question. If you live in Houston, Houston's a good market. If you don't live in Houston, I would stay away. Michigan, not bad. Not a bad market. Yeah, Michigan is a good market. Maybe not Detroit, right? You want to be in other parts of Michigan. Yeah. Austin, great market. It's it's a great market. It's just pricey, as you know, right? It's pricey, but it's a lot of growth. Texas is a great market. It's blowing up. The only challenge with Texas right now is insurance cost, right? And property taxes. But if you live in that state, if you're in that state, you know this. So you just have to work around it. Dallas is a killer market. Dallas, Fort Worth, any of the subsets around that general metro area, Dallas, Fort Worth, all of it's killer. We have a ton of people in the community in the Texas market. Oklahoma, Missouri, Tennessee, Alabama, Florida, Carolinas, Georgia, Nevada, Arizona, Colorado, some Californians, New Jersey. Because what happens in New York and New Jersey is people go to Pennsylvania. Pennsylvania is a good market. New York and New Jersey are tough, right? It's like California. So they go elsewhere. Kentucky. I mean, all those markets are great. Yeah. Myrtle Beach, South Carolina. Great market. Yeah, South Carolina is a great market. Great market. Pennsylvania is good. Yeah, it's great if you live there too. But if you're in New York, New Jersey, you can go into Pennsylvania. I got to think about Connecticut though. I got to look into landlord-tenant laws in Connecticut. I'm not aware of that. But beautiful. Any other questions before we finish up for the night? I hope this has been extremely helpful in kind of giving you some weeds on some of it, how you can actually execute. How can you go buy an apartment building in the next 90 days with as little as $30,000, $10,000, $15,000 out of pocket? I showed you 2 specific deals, and one I physically did. So you can go execute this. And then, of course, now you need to know the nuance. Like I always say, it's not the information. I can give you all the information. I could literally give you all the courses for free. That's irrelevant. It's what you do with it that makes the difference. And typically, it's being in a community of like-minded folks, having some accountability, and having somebody you can lean on to say, hey, how do I actually do this? Or when you're in the middle of it, how do I execute it from this point forward? And having that kind of sounding board and someone that's actually in the market doing it every day help you. So that's the difference. We have some Section 8 to answer your question, Michael. We have some Section 8 in our complexes, but we do not do solely Section 8. That is a business model. It works. You just have to be very, very, very tactful with that. The reason why is because, unfortunately, with the Section 8 tenants, you need to screen the living you know what out of them, because otherwise they're going to burn your building down. I'm dead serious. Because, I mean, we had a building that had 40% Section 8. Okay. We had a building that we purchased that had 40% Section 8 in it. I wanted to kill myself. We got them all out. We got them all out. But I'm just telling you, they're going to destroy the building. It's just a different mindset. I wish it weren't the case. I wish I could sit here and say, yay. It's a different mindset of how they take care of things or not take care of things. Some do, some don't, which is why the screening process, if you're going to get into that business model, is so critical to doing it well. It is nice to have the guaranteed check, but you just got to understand it. I really appreciate everybody coming in. I hope this is super helpful. That's why we're here. Obviously, at the end of the day, it's all about this, right? It's all about collaboration and partnerships. Because these are the states that we're kind of investing in, just FYI. You can see that, right? From like the states. But the community is really what it's all about. All about this. people asked me the other day, I had a nice lady, Kimba, that just came into the community. She said, well, what's in it for you, Justin? Why are you doing this? And I said, you have to understand, my BHAG is 10,000 units. I've explained to you that you don't get there alone. It's not solopreneur world. It's collaboration. It's partnerships. It's sourcing deals through partnerships and collaboration. It's financing and putting deals together through collaboration and partnerships. It's analyzing. That's how it all happens, guys. You don't do it alone. There's no way we're getting to 10,000 units doing it alone. You do it through collaboration. Because what's going to happen, like I told her, I said, Kimba, you're going to get into your first 10 to 30 unit deal, then maybe your second one. And then you're going to get the confidence. You're going to be like, Justin, I want to go bigger. I found this 80 unit deal, but I can't do it alone, Justin. Great. Let's partner. So then our portfolio grows, her portfolio grows, everybody wins. And that is why we do it. Okay. That's what this is all about.